Without further ado, Robin, how you doing?
Yes, very good, Chris. Good evening. Yeah, thanks for having me, and yeah, pleasure to be on.
Great stuff. So, Robin, before we get into the sort of heavy stuff of insurance, I think it's really important for our viewers who are on tonight. Let's take it right back to the start of your career, getting into property, getting into insurance. What was it that drew you into the world of property insurance? Was it sort of that classic you just sort of happened to fall into it, or was it there sort of a more structured route into property insurance?
Yeah, it's a good place to start. I mean, you say fall right back, and we will go right back because it does feel like yeah, quite a while ago now. But yeah, when I finished school, didn't have a clue what sort of career I wanted to partake in. So I went to university, did a degree in something that wasn't necessarily going to qualify me into a profession. Throughout university, I worked in a pub to pay the bills, and then straight after university, I became a pub manager. Um, Got very bored of that very quickly. Long hours, lots of drama, lots of late nights. So, yeah, like probably 95% of the people in the insurance industry, found the first office job I could find, and it was in the wonderful world of insurance. And yeah, the rest, as they say, is history.
Fantastic. There is a bit of a link there with your pub career, considering how many pubs seem to go on fire or shut down. So I think there is definitely it started the spark for insurance there. So what's your journey been like in terms of um, from where you started insurance to becoming the managing director of Bridge Insurance? What was that journey like? Was there any sort of detours along the way?
Yeah, a few. So the very first job I had was a claims role, which actually, by the way, is a very good place to start within the insurance industry. I think it gives people a good grounding when it comes to insurance, gets people to learn policy wordings and what policies cover, which then propels them into other roles in the future. So after 3 years in that claims role, I was offered a role as an in-house insurance broker for a national block management company. So I dealt with all of their claims and all of their broking in-house. And that's really where my passion for real estate and real estate insurance came in. Was there for 3, 4 years, and then decided to embark on a career in what I would consider proper insurance broking. So moved across to a multinational insurance broker, very well known in the industry. Was there for 14 years. I was lucky enough to be given many roles and responsibilities throughout my time there, and ended up being the managing director of their real estate division before finally moving across to Bridge in July 24. And yeah, certainly couldn't be happier with the move since.
Yeah, and Bridge seems to have, certainly from my experience of working with property developers and landlords, Bridge has a really solid reputation within the industry. What's it like working there day to day? Why is it such a solid outfit in terms of the reputation that you carry? What makes it so different to maybe other brokerages that you've worked at?
Mm. Yeah, I think there's one word for that, and that's independence. Bridge is an independent insurance broker, one of the largest in the country. But not only that, what we try and do is we try and provide independence to all of our staff members so that everyone, no matter what role they're in, feels empowered to be involved in business making decisions. And we'd always consider everything as long as it made business sense and we felt that it was right for the clients. Then nothing's off the table. And I think that that sense of empowerment and sense of independence is a real selling point for someone like Bridge.
Definitely. And in terms of your role, so you're managing director, based in London. Um, what is what is your role like day to day in terms of, what is the stuff that really gets you excited about some of the cases that you're maybe working on? And I can imagine you see all sorts.
Yeah. So my role at the moment, and probably for the foreseeable future, is very much split into two sections. Um, Number one, you've got the client management and the development side of things, and trying to grow the business, personally bringing in new business and new clients into the business, which is something that I've always had a drive for, and a buzz about. And yeah, touch wood, that buzz never goes away, because it is something that I really have a passion for in terms of engaging with new individuals, new businesses, listening to their problems and trying to find an insurance related solution for. Um, Job number two, which I suppose is equally as important when you're trying to grow a business, is the people management side of things. And I think it's something that's really only caught up with me in the last 3 to 5 years. In it's all about, in the same way that you listen to clients, listening to staff, figuring out what makes them tick, um, taking a passion in developing them and making them the best versions of themselves as well. I think if in a role like mine, I think if you can do both of those things well, then the business will succeed.
Brilliant. And on the flip side of that, there's parts of the job that certainly when you talk about insurance that a lot of people um, don't necessarily consider how complex and how many moving parts there are. Can you sort of share some of that with us? Like in terms of, is there stuff that we wouldn't necessarily even know goes on in the background? And particularly with your role, how is that
Mm.
sort of, do you manage that day to day?
Yeah, I think the answer to that question, Chris, probably changes quite often, because the insurance arena and landscape changes so often. Certainly, the biggest challenge that I find at the moment is trying to navigate the insurer market. And by that, I mean trying to figure out which insurer or which insurers are best for certain types of risk, because we went through a very soft market up to about 2021. And by soft market, I mean very low rates, very low insurance premiums, insurers very much needing clients more than clients needing insurers, to a quite hard market between 21 and 23, where that was reversed. And we're now probably entering another soft market where we're seeing rates and premiums reduce, maybe not quite as far back as they were back in sort of 2020 pre-COVID times. Um, but the difficulty with that, the difficulty in navigating that, is that not all insurers are moving at the same pace.
Mm.
So some insurers are slashing rates, some insurers are standing firm. So it's trying to navigate that and still trying to find the best option for your clients. Alongside that as well, you find that insurers, and this isn't necessarily symptomatic of a hard market or soft market. This is just a way of the world at the moment. Some insurers have a load of questions that need to be answered. And frustratingly, if you send, a property risk or a construction risk to 5 different insurers, invariably you'll get 5 different sets of questions back. So trying to navigate that while still trying to impress a client and ultimately win their business at the end can be quite tricky.
Yeah, it's really interesting because I never would have perceived insurance like that. It's almost a carbon copy of, the financial markets and the way that it all works and how intricate it is. When you go to your sort of broker for a finance broker, I have to use the correct terminology. If you go for your finance broker, there's so many different shifts in the market that can affect those prices. And I guess it's the exact same if you're dealing with insurance because they're as vulnerable to the same level of risks and the same sort of financial situation that's going on even globally.
Yeah, most definitely, and I think that that's where a good insurance broker really stands out because you have to keep up with those changes. You have to, regularly engage with the insurer market. I think if you rest on your laurels too much and yeah, have the potential of becoming a little bit complacent, that's where you do struggle to be relevant when it
Mm.
comes to premium rates.
Definitely. And in terms of sort of more focusing on the property industry, what would you say that, with all your experience dealing with property developers and landlords, property investors, what is the one thing that you wish that they knew that isn't maybe necessarily communicated very well to them, or as, it's something that's not immediately obvious about insurance, that probably would help their experience of insurance go a lot better?
Um, yeah, quite a tough one. I mean, I think whilst most insurance brokers would turn around and say, "Oh, we'd love our clients to be a little bit more clued up on the world of insurance and what certain acronyms and phrases and abbreviations mean," sometimes, ironically, sometimes being too clued up can create issues for us as well. I think that the one thing that sometimes is missed when it comes to insurance broking and the reputation of insurance brokers is ultimately we are trying to help. We are problem solvers. In that we will look at a client's risk. We will identify the problems they've got with that risk and the exposure they have to potential issues in the future, and we will try and find solutions for them. Yes, of course, that comes with a price, but most things do nowadays. And I think that drive and thrive to really help people is sometimes missed when it comes to the views on the financial side of things. I think quite often we're just accused of chasing the pound notes, whereas actually we are experts and we are just merely trying to help. And I think that when clients that really only comes out when clients suffer a loss and they realize that actually they've got a very, very good insurance program in place.
Definitely. And you mentioned acronyms there that we don't know. What's an acronym that's really complex that we won't have heard of before?
Um, there's loads. I mean, you look at the property market. You've got loads of acronyms and abbreviations. Such as DV is declared value, SI is sum insured. And I think that sometimes this is where insurance brokers get it a little bit wrong because ultimately you are supposed to speak the client's language, not your own language. And you know, I see it quite often where a ton of acronyms get put in a report and there's no real explanation as to what they mean. I can only imagine it from a client's point of view, reading it and sort of frantically Googling what they actually mean and probably getting some American version that is not what we actually mean in the first place. So it's just about making things relevant, making things as easy to understand as possible for clients, so that there is no confusion.
Oh yeah, I've dealt with a lot of marketers in the past that use really complicated language to say the most straightforward things, but it makes them sound intelligent by saying it. Then everyone leaves the meeting going, "What the hell was that about?"
Yeah.
Yeah, I totally get that. So in terms of property developers, property investors, you've worked with loads of different ones, different projects. What's the standout projects? What's the one that, if we were sat down a pub right now and I said to you, what's the most interesting one you've got? What would it be? What would be the one that screams to you
Yeah,
all the time?
look, most people are going to turn around to that question and give you examples of the biggest ones, the best ones,
Yeah,
the most glamorous, the most glitzy. But ultimately, I'm a firm believer in any business is good business. You are still ultimately helping a client to find a solution to their problems and to cover them and to provide them with protection. So sometimes for me, the best ones are the smallest ones, because I think they're the ones where clients really appreciate the work that goes into certain things. Some sort of dilapidated property that someone's just bought on auction, and they really need to redo it to either live in it or sell it in the future. They go to 5 insurance brokers and they all turn around and say no thanks, but no thanks. And you find a solution for those types of clients. Yes, they're not going to pay you a lot of money, but ultimately that does provide a more deeper level of satisfaction, because you've sort of got them out of a hole, and they can sleep easy and you can sleep easy. But there are loads of horror stories, and any insurance broker will have horror stories, but there's probably too many to mention on the call. Yeah.
have you got one that stands out?
Um, Only recently we were provided with a risk or provided with details of a risk on an email, that if you read the email, you would think, oh, actually, this looks quite nice. But you you only had to do a quick Google search, and the wonders of Google Street View really helps us out as insurance brokers, and I'm sure it does help out insurers as well nowadays. But yeah, let's just say if that image was taken from a war-torn country, you wouldn't be surprised. But actually, it was, yeah, quite a well-known city in England, and yeah, certainly that's where our due diligence really paid dividends, because if we had presented what the client had presented to us to the insurer, then we could have looked a little bit silly.
Well, I can only imagine if you were to use Google Street View on Coventry, around where I live, I'm sure that there's plenty of houses for you to add to your list on the top 10, Robin. But one of the questions that so I was talking to someone about doing this webinar this week, and it was not sort of a question I'd thought of, but it was really interesting when you're doing when you're looking at insurance and you've got a client that comes forward and they're potentially asking about sort of financial history. Is there a sort of a statute of limitations on how much financial history an individual can go into? How important is it for you as a broker to see that?
Yeah, it's a really good question. Certainly, really good when we talk about the context of this particular webinar, and trying to uncover the pitfalls of insurance, because I'd say about 5 years ago, it wasn't anywhere near as important as it is now. Unfortunately for us as brokers, insurers are looking more and more into financial history when a claim happens, and financial history that isn't necessarily relevant to the claim or even the property or project that is being covered. They will do quite a deep dive into financial history. And if things haven't been disclosed, be it by mistake or potentially on purpose, then insurers will have some issues with that. I would personally say disclose everything, because if you disclose everything, then there are no grey areas. It might be a bit of a pain in the backside, but I would always, if there is something there, even if it is 5, 7, 10 years ago, just disclose it, because not only will it make sure that claims are paid, it will portray you in quite a positive light to that insurance company, because if you get it wrong, then there could be severe consequences.
Yeah, definitely. And the same individual that asked me to ask that question has also asked me a question which was I think I know the answer to, but it'd be really important to get your view on this, particularly with insurance policies. And when you are making an application for an insurance policy with a broker, what is the difference between? Why is there such a difference between uh, timber floors and concrete floors in a building? Um, I believe this person was, and I'm not going to name them, but I believe that they've had a couple of instances where there's been sort of vast differences between those.
Yeah. I think working in the insurance industry, the answer to that is quite obvious. But when I go back to sort of trying to be as simplified as possible and trying to explain things as much as possible, um, I can only imagine that actually there's probably quite a few non-insurance professionals that would be surprised by the fact that there is a massive contrast between concrete and timber floors. When we look at property and property claims, probably the two biggest um, claim causes are escape of water and fire.
Hmm.
Now, having concrete floors for both of those protects the building more. Escape of water, if you had concrete floors, the water wouldn't necessarily seep down from floor to floor to floor. Although it does, there may be holes in the concrete, it may well go down stairwells. There are examples where it does. For fire, obviously, timber floors, there is no protection there. That timber can catch on fire and the fire can go from floor to floor to floor. So we historically, there's always been a pricing differential between the two. More often than not, and certainly more recently, there is also an appetite differential, whereby a lot of insurers just will not consider timber floored properties anymore. And historically, that was residential only, but we are seeing more and more using that stance on commercial buildings as well.
Right. Okay. Yeah. I mean, I always wondered that in terms of because concrete has its own flaws, if you pardon the pun, in itself. Particularly the area I live in, there's a lot of red ash mixed into the concrete, which, as you know, is porous and allows moisture to come up through, and can cause significant damage to the whole structure if it goes wrong. I just wonder if you're able to determine if a property is at risk of that based on their sort of geographical location, because typically a lot of those areas are ex-mining areas that, or wimpy no fines properties that do have that red ash in there.
Yeah, I mean, I think insurers would probably have that knowledge. They spend millions of pounds a year on postcode mapping tools and area checking facilities, so they may well have that background knowledge. But certainly, from our perspective, in basic terms, the differential would be concrete and timber, with concrete being seen as a better risk than timber.
Definitely. So we're getting into the nuts and bolts of the house. I can feel we're going into sort of double glazing, guttering in a minute, but I am going to touch on flat roofs. So I do apologise, but it does seem to cause a bit of, it does seem to ruffle a few feathers, flat roofs. Is it, a bigger issue as people make out in terms of trying to get them insured, or is it relatively straightforward?
Um, so firstly, I think a lot of insurers' concerns can be incredibly frustrating if they're not explained properly. I think that a lot of insurers' concerns are also justified somehow, somewhere down the line. We take flat roofs as an example. Somewhere down the line, insurers must have had significant claims caused by flat roofs and poorly maintained flat roofs, because otherwise they wouldn't necessarily have an issue now. So I think that's probably the reason why they do have an issue. And I should think that it's all been to do with poorly maintained flat roofs that have caused ingress of water into a building that's caused thousands of pounds worth of damage. Um, but that said, the insurer market has put in place measures more recently that not only protects them, but encourages clients, insureds, property owners, property developers um, to be more proactive when it comes to maintenance of flat roofs. So the majority of insurers will insist on annual or biannual roof inspections.
Mm.
So they'll expect clients to pay to inspect the roof or to get the roof inspected just to check for holes, cracks, tears, leaks, which obviously protects their position as an insurer, but also from a client's perspective. If you do manage to do that, then if a claim occurs, it will still be paid out. Yeah, so I think that is a positive step from the insurer market.
Definitely. I think the building materials are improving anyway. And when you look at sort of when you drive around just your estates, no one's really doing flat roofs anymore. It doesn't, it's almost gone out of fashion. People would rather spend the money and put probably a gable or a pitch on it anyway. Uh,
Yeah, definitely. I think also the evolution of roof inspections has changed as well. There's a lot of drone surveys nowadays,
yeah.
which work out a lot cheaper, and a lot of insurers do accept them nowadays. Because obviously drone technology has improved so much over the last few years that you don't need to get scaffolding up to get a human on top of a roof to check it. You can actually do that through drone surveys.
Cool. Well, we've nearly gone around the entire house and how to build a house. So I'm going to take it to the buy-to-let side of things and tenants, and you guys look after sort of or supporting landlords find insurance policies for tenants. So, do you think there's anything that really makes an insurer wince about insuring a tenant, or is there sort of a cardboard cutout dream tenant that insurers like working with? What's the sort of situation there? Is there a dream tenant?
Um, There is I mean, I suppose a dream tenant, and insurers wouldn't necessarily get excited by this, but I suppose dream slash standard would be a living leaseholder, um, an AST tenant, or an AST tenant that's working, or an AST tenant who, is on some form of income support but still has a an agreement with the leaseholder or landlord. Um, Non-standard tenants, I mean, the list is quite exhaustive. I think insurers worry when there isn't a relationship between the landlord of a property and whoever is residing in there. So, as soon as there are third parties involved, and the landlord would have a tenancy agreement with the third party, and then the third party is responsible for placing the tenant, insurers do struggle with that a little bit, and you certainly do find yourself going down the route of a little bit of a non-standard insurer to find cover. And again, going back to the question on flat roofs, um, that is largely because they've had experience of those types of tenancies not necessarily creating claims, but not looking after properties. And when a claim occurs, not being proactive in sorting out the matter, which obviously then causes them to have to pay more money from an insurer perspective.
So with that, Robin, you've kind of given me, and I don't know how our audience feel, but you've given me certainly a feeling of reassurance that, when there's premiums that are applied to certain cases because there are potentially more at risk, it feels like there's almost a science there in place, or almost a metric and algorithm that determines how much that premium is. Is that, in your experience, is there an exact sort of science to how they'd come to a premium?
Yeah, there is, and we'll take it back to right at the beginning of the conversation, Chris, when we said about simplifying things and making clients and making others aware of how things are worked out and calculated when it comes to a premium. But quite simply, you from a property risk. From a sort of development construction side of things, it's slightly different because there's a few things that come into play. But certainly from a property risk, you have the rebuild value, which is always dictated by the client. So the
Mm.
client is responsible for providing an adequate rebuild value. And then you multiply the rebuild value by the insurer rate. Now, the insurer rate isn't a set figure. There are lots of things that come into play from the insurers, such as construction of the building. We spoke about financial history that could have a say, claims history, whether or not the properties suffered from subsidence or flooding in the past, the type of occupants. There are lots of things that come into play. So yes, there is definitely science behind that premium that clients pay.
Right. And if I'm a property developer and I come to you looking for a quote on insurance and you're able to broker that for me, in terms of if I've got a number of different potential policies of how much that is, how do you make a decision on which insurer to go with, or what's the sort of thought process behind that? I imagine a lot of it comes down to reputation and service, but is there sort of a few more dynamics involved in that?
Yeah. I suppose, our job is to recommend an insurer or insurance policy that is going to respond in the event of a loss.
Mm.
If we're talking about standard insurers and standard insurance products, there are loads around. There are way too many to mention insurers that would cover a bog standard buy to let, or a shop downstairs with residential upstairs. There are a lot, and we would recommend based on coverage, based on financial rating, based on reputation, based on willingness to pay claims. And obviously premium comes into play there as well. Sometimes premium isn't always best. Sometimes you do, in the insurance world, pay for what you get, so to speak, in terms of if you pay cheap, then you don't get great service. That being said, if we were to recommend the most competitive premium, then as professional insurance brokers, we would still expect that insurer to pay a claim if an incident occurred.
So the message is there. Basically, come to Bridge Insurance Brokers and actually deal with you guys who can actually place that best, because you've got the market knowledge for the reputation and the best levels of service. So I hope that's the message that everyone takes home tonight. In terms of the audience, guys, if you have got any questions, I can see a couple have come through already. If you've got any questions for Robin, then please do drop them in the chat. We'd love to hear from you, and we'll get round to those very, very shortly. I'm going to take it. We've already mentioned it slightly with the concrete and the timber floors, but as a wider issue, flooding is becoming more and more an issue, not just for property developers, but also homeowners. It's something we see at least once a year in the news. Either it's Cornwall or it's up near Carlisle, everyone's underwater. What what is sort of the situation with that from an insurer's perspective, or from a broker's perspective? Is there ways that you're bringing that information in? Are you checking that data, the flood risk, on a regular basis? Because it seems like some areas that weren't flooding are now flooding, or it, could you give us a bit of insight into that?
Yeah, I mean, it's obviously, you're right. It's a big issue. It's a big issue that will continue to be a big issue. I think we are seeing more and more flood issues across the country. And yeah, probably 10 years ago, insurers were mainly concerned about flooding from rivers and seas and waterways, you know, things that you could actually see. And if a property was right next to a river, then it would be considered a flood risk. But I think more and more often now, insurers are also looking at what they consider surface water flooding. And I don't know if you remember, we had some very, very high profile flooding towards the north of London and home counties in July 21, when there
Yeah.
was massive amounts of flash flooding. You know, a huge amount of rain came in the space of a couple of hours. And quite simply, the drains couldn't cope. So it turned thousands and thousands of basements into swimming pools. So that is now a big, big concern of insurers, and you know it's created a question set about basements. Insurers now don't necessarily like properties with basements because of that flood risk, unless there is sufficient evidence that it's not going to flood. Is there a solution to it? Probably not. Being brutally honest, not at the moment anyway. The government have spoken at length over quite a number of years about providing a solution and helping with the issue. But I think it is an ever evolving and moving piece that makes it very, very difficult to find a solution. The only thing that I can recommend is, if there is a property or development that is potentially in a flood area, the sooner you get to the insurance renewal and the sooner that you start engaging with a broker, the better, because that will give the broker as much time as possible to approach the whole insurance market. And believe it or not, most insurers use different flood mapping tools. So an area may well be a big flood black spot for 9 insurers, but there might be one insurer over here who don't consider it an issue. So yeah, it's important to search the market as high and low as possible.
Yeah, I remember that one in 2021, and it was just, you know, a foot worth of water running down the street, but actually most people have dug down to try and find homes and extra accommodation, and those homes are completely gone. You know, I don't know how they're still recovering from that. So yeah, I guess the more information you can give to your broker, the easier it's going to be in the long run
Absolutely.
for that. Before we go to questions from the audience, Robin, I'm just going to ask you my final question, which is, what advice would you give to someone new to the property game when it comes to building trust with or building a relationship with a broker?
Choose someone that you trust. I know you just said, you know, what would you do in terms of building trust? But yeah, choose an expert, choose someone that you feel is an expert, choose someone that you feel confident in, and someone that, or a firm that you believe has your best interests at heart. I think quite often you can sense how a broker or how an individual within a broker's is going to treat you as a customer before you are a customer. So when you're a prospect, when they're getting quotations for you, how engaging are they? How engaged are they? How much feedback are they giving you? Are they keeping you updated along the way? You know, insurance broking nowadays is a lot about relationships. Yeah, like I said from the start, we are ultimately looking after people. And if you are looking after people, you need to be personable, and you need to, you know, speak to people with respect, and, you know, take that transactional nature of insurance broking out of the equation. Yes, of course, price continues to be key, especially in today's world where everyone is struggling to pay bills and bills are increasing all the time. But ultimately, you know, relationship is very, very important, because when something goes wrong, and invariably things do go wrong, you need to have faith that whoever you have engaged with and whoever you have put the faith in is going to have your back and look after you.
Yeah, I think that's really solid advice. Thanks, Robin. So we're going to go to questions from the audience now. There's been a couple of questions come in from Anonymous, which is great to see. But let us know who you are and where you're dialing in from around the country. So the first question is, what is deemed as an all risk cover? What does this mean, and what does it cover?
Um, well, I suppose the simple answer is it does what it says on the tin. All risks covers everything unless specifically excluded. So
Hmm.
you have all risks cover and then you have a defined perils cover. So a defined perils cover in the policy wording would list out exactly what it covers. All risks would be, strictly speaking, everything apart from what is specifically excluded.
Okay, I hope that answers your question, Anonymous. We're going to go to Anonymous again. Is the in the current market, would you say a day one uplift is better than index linking? If so, why? That sounds really complicated.
It is where sort of acronyms and phrases come in. So um, I would say both, actually. So index linking is important. So there's sort of two separate things. Index linking is very important to keep the rebuild value true. What we would recommend is to get a valuation, a rebuild cost assessment done every 3 to 5 years, dependent on the size of the property. As long as you do that, then having that rebuild value index linked in the years in between should cover you against underinsurance. Um, a day one uplift comes into play if, which hopefully would never happen, but sometimes it does, if there was a total loss. So if a property needed to be fully rebuilt, let's say the rebuild value was £1 million. Obviously, if a property takes 2 years to rebuild, it's going to cost you more than £1 million, because where £1 million is your starting point, there's going to be inflation on top of that, and cost of materials will increase, and that's where that day one uplift comes into play. So
Hmm.
a day one uplift would only ever come into play in the event of the property needing to be rebuilt.
It's a bit like those figures they used to put on home buyers reports. I don't know if they still do it, where it's basically like a redemption figure. So it's like if the house got blown up, it was the cost to rebuild the house from scratch. I guess
Yeah,
that's a bit like a day one uplift. Cool.
yeah,
And we'll go to our next question, which is are blocks of flats with ACM cladding still hard to insure?
hard. Yes, definitely. A little bit easier than they were 3 to 5 years ago.
Hmm.
There is I'm not going to bore you with the intricacies of phrases and words in the insurance industry, but there is what is considered a reinsurance scheme backed by the government that a lot of the major insurers have bought into, which basically means that if those major insurers cover a cladded risk, they're able to buy reinsurance through this government-backed scheme, which would then obviously cover their position in the event of a loss. So, whilst in theory that is a very positive move, in reality it is still quite difficult. And I think an ACM cladded building that needs remediation, I'd say you'd probably have less than a handful of insurers that would be willing to look at it still.
And is ACM cladding sort of in the same ballpark as, all the issues with cladding that we've had in the past?
Yeah, ACM cladding. I mean, there's lots of differentials to that, but
Yeah.
ACM cladding was considered the cladding on Grenfell, so
Right.
that is always considered the worst. But there's probably quite a few that are of similar risk. And another thing when it comes to cladding is um, the insulation materials used are sometimes worse than the actual cladding itself.
Hmm.
So that is another thing to consider that creates issues.
Well, thank you so much for helping our audience members out, Robin. We're going to go to our final question, which is from Donna. I am looking at several properties, and one has had some underpinning. With regards with having insurance whilst the refurb, etc., included, how do you look at the property like this? Would it be more expensive to insure?
Not necessarily more expensive. I think if you were able to provide a structural adequacy report, and the underpinning happened a number of years ago, then there are some quite understanding insurers out there that would still provide cover for it. With something that's, suffered subsidence or heave and had to have remedial action such as underpinning, um, the question is around cover and whether or not they cover subsidence, or excess for subsidence rather than premium. We find that is the main issue there. But certainly there are more and more understanding insurers out there for that type of thing.
Great stuff. I hope that answers your question, Donna. Robin, thank you so much for this evening, giving up your evening to come and help our audience members out and helping sort of dispel some of the myths around property insurance. Where can people find you if they want to reach out with anything further?
Yeah, so like anything nowadays, social media. So obviously, yeah, we're on UK Homes Network, yeah, which is a fantastic place to find us. If you can't find us, LinkedIn or email or phone, and I'm sure that yeah, contact details will follow in due course.
Great stuff. Yeah, and you guys are going to be at headline sponsors at our Manchester event. So if anyone wants to come down and meet you in person, the team from Bridge Insurance will be there all evening, and you can put live some of your questions from the webinar to them, test them, see if their knowledge is as good as Robin's. That'd be good fun. So really looking forward to that. And if you would like to watch this recording back, you can do it as a premium member in our on-demand webinars tab. In there is also a webinar from our good friend and colleague Anthony Kaminsky, who is I can see in the audience tonight. Anthony did a webinar with us last year around latent defects insurance, which was also a really fascinating talk. So if you guys would like more information on that, then you can do that on the on-demand webinar tab in the UK Homes Network app as a premium member. Our next webinar is going to be on the 30th of September with we've got Gavin Eade from 83 Property. Gavin is a firm favourite with the UK Homes Network members. He's posting in every day. And if you've met him at our live event in Birmingham, you know he's a good laugh as well. So we're getting him on the 30th of September. If you'd like more details for that, it's on the events tab in UK Homes Network. And the recording for this webinar will be out shortly. Thank you so much, Robin. I really, really appreciate it. It's been great having you on this evening. And I look forward to working with you further still. So thanks very much.
Brilliant. Thanks, Chris.
All right. Take care, everyone. Have a good evening.